Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, we're on Friday and this week has rather been a painful week for investors at large. We've actually seen the Nifty ending the weekly expiry yesterday also on a weak note, and this is largely to do with the underperformance across the board, especially in the broader markets that we have been seeing, especially two sectors and heavyweights from those sectors led the fall yesterday from the FMCG sector, HUL and ITC. That dragged the overall sentiment yesterday. But the Nifty has now declined on all 4 days of this week thus far and is now set for another weekly loss. For the week, the Nifty is down 1.8%, and to now prevent a fourth straight weekly drop, Nifty really needs to close above 24,854 odd levels today to be able to see that green overall in this week, although that's still 400 points away from where we are currently at. Remains to be seen whether a bounce back will come in or will we see another day that will go to the bears in trade today. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. First all, thank God it's Friday. मतलब परेशान हो गए सेलिंग देख देख के और the next 2 days are meant for resting. Just forget about the market, ladies and gentlemen. 2 or 3 good things have happened. One, we are now starting life below 100-day exponential moving average. 3-4 days of maybe pain or sideways consolidation. We've already corrected 1800 points from the start of October, mainly because of excessive overvaluations and sustained foreign institutional selling. Some of that has abated. There are signs of life as far as good quarterly numbers are concerned. We'll be discussing ITC, NTPC, Dixon Technologies in particular, and Radico Khaitan as well. Today is a very, very heavy earnings day. 5 from the Nifty and 8 from the F&O space are going to report their second quarter performance. But let us start with some good news. Sakshi, there is some kind of profit booking on the dollar index as also the US 10-year yield, and that essentially means that some of the pain and the throat that has been clasped by the bears of the bulls, that might ease. We are also at the start at the weekend, therefore it's unlikely that further sales would be pressed on the short side. So some relief is expected as far as markets are concerned, driven primarily by news on earnings. So this trimming of the US 10-year bond yield as also of the dollar index will bring relief to Indian equities. Let us see for how long it lasts. For the last 4 sessions, we've had excessive pain. 1.4% is what the Nifty has lost. And of course, what is also critical is that today is the weekly expiry of the Sensex. So some point of short covering for that also is expected. Look at the bank Nifty. It is providing support to the Nifty, and in particular, you have HDFC Bank. So far, Sakshi, HDFC Bank is up 3.5% this week, and it is amongst the 4 Nifty stocks, just 4 Nifty stocks that are up on a weekly basis, which is HDFC Bank, you have Bajaj Finance, Bajaj Auto, and Tech Mahindra, which essentially means that 46 out of 50 stocks of the Nifty are in negative territory so far this week. So it's heavily oversold, and you just might see a spark of an uptick early in trade today. If you look at how the options data is suggesting, the price of the 24,400 option call for the Nifty expiring October 31st is what I will be looking at today. This will show some momentum on the long side. As also for those people who believe that we have a good round of gains ahead over the next 5 months, 6 months, this is the right time, ladies and gentlemen, to put in that extra SIP. Personally, I have been buying the SBI Nifty ETF from the market. It's corrected 18-19% from its most recent high, and that's the best strategy if you believe that the Nifty will bounce back in the coming 3, 4, 5, 6 months. As also, please keep an eye out on a good mid cap, in fact a good equity diversified fund which can give you very serious returns over the next 3-4 months. So far you have a very strong show coming in from ITC. This has been in the second quarter a very sharp uptick as far as volume is concerned. 3% growth in cigarettes. FMCG is flat. The volume growth in FMCG was expected to be 7 to 8%. It's a good 5%. Keep an eye out on ITC, as also two stocks. Dixon Technologies, a blowout quarter, ladies and gentlemen, on Dixon. The stock is in the F&O space and at a record high. Even at this size of the balance sheet, sales have gone up by 133% to 11,534 crores in the quarter just gone by. Net profit is up 119%. That's 412 rupees versus 113 a year ago. This is a very expensive stock. The PE is 160. But with this kind of a blowout number, a gap up is there. Should the gap up be chased? Only time will tell. But keep an eye out on Dixon Technologies. And from the liquor space, it's Radico Khaitan, ladies and gentlemen. A very strong show on Radico Khaitan. Again, the PE is 106. The company is at a record high. Sales for the quarter gone by are up 21% at 1,116 crore rupees, and net profit is up 33% at 82 crore rupees. So look at the premiumization of the liquor market. You have Indian made foreign liquor doing phenomenally well compared with foreign liquor that is being sold by United Spirits. Their numbers came yesterday. The other data on NTPC, on many other earnings, will be given by Sakshi. But let's check with her how Wall Street performed and what are the cues that are coming in from foreign friends. They remain sellers, but it's time to ignore them. Sakshi.
Absolutely. So the US shares did edge higher in a choppy trading session on Thursday. This was to snap the 3 days of continuous losses that even the US markets were posting, while the US Treasury yields and strong corporate results allayed the worries about the upcoming US elections and interest rate cuts. Remember, Tesla's earnings definitely helped Wall Street post first session of gains this week. And the Dow Jones Industrial Average, however, did still slip about 0.3% odd in trade. It was the Nasdaq that outperformed with 0.7% gains, and the S&P 500 also managed a 0.2% uptick by the end of the session. The US 10-year Treasury was down 47 basis points at 4.19%, while the US 2-year Treasury has shed about 42 basis points at 4.06% in the early trade of today as well. Now, stocks in the Asia-Pacific region were trading mixed in the early morning trading action. We've seen Australia's ASX 200. It was about 33 points down in trade, higher in trade, or about 0.4% up in trade. The Japanese Nikkei was down about 277 points, or almost a percent lower in trade. Kospi, however, managed a 0.2% uptick. Hang Seng also jumped about 1% higher in trade, and the China Composite also was up by 1%. Although the GIFT Nifty is now indicating a flattish with a muted trade for the benchmark indices to open at 24,445 odd levels right there. Remember, the overseas investors have remained net sellers for the 19th straight session now as of Thursday. And the domestic institutional investors, they have bought equities for the 23rd straight session. Remember, FIIs offloaded stocks worth about 5,062 odd crore rupees, and the domestic institutional investors bought stocks worth about 3,620 odd crore rupees. This is lower than the sell-off that we have seen on an intraday basis by the FPIs. Although on all the days that we have seen thus far, DIs have either matched or done more to equate and provide for the sell-off that we have been seeing by the FPIs. Let's look at the earnings front as well now. Let's look at ITC numbers. Standalone YOY numbers show revenue up 16% to 19,327 crores. This was ahead of estimates. EBITDA was up 5% to 6,335 crores. This has been rather flattish, or as per the expectations. Margins came in lower at 32.8% versus 36.5%. This was below the estimates. Net profit just jumped by about 3% at 5,078 odd crore rupees. rupees, again slightly below estimates right there. IndusInd Bank Q2 standalone YOY numbers show NII was up 5% at 5,347 crores. Net profit, however, slipped 39% at 1325 odd crore rupees right there. The gross NPA came in flat with a negative bias, which is positive, 2.1% versus 2.02%. We've actually seen a net NPA at 0.64% versus 0.60%. This has slightly been an uptick on a sequential basis. Provisions came in higher by 73% at 1820 odd crore rupees right there. So there could be some dips after the earnings have been reported. It's been slightly below estimates. PNB Housing Finance net profit rose by 22.7% from the last year. Net interest income surged 2.7% to 650 crores as well. JSW Energy, here the net profit has increased 2.3% to 876 crores, and the revenue was down 0.7% from last year to 3237 odd crore rupees. EBITDA fell by 10.5%. EBITDA margins came in at 52% versus 57.7%, again lower than last year as well. United Breweries also came out with the numbers. Net profit here rose by 23.4% at 132 crores. Revenue was up by 12% at 2,114 crores. EBITDA rose 23% at 226 crores, and the margins came in at 10.7%. Again, when we look at Aarti Drugs, the net profit here declined by almost 11.5%. Revenue fell by 6.5%. EBITDA was down by 12.3%, and the margins also came in lower at 11.2%. So all across the board, we did see weakness persist. On IEX, we've actually seen the net profit was up 28.8% at 106.8 crores. Revenue was up 28.3 crores versus last year. EBITDA improved by 30.5%, and the margins came in at higher at 86.4% versus 85%. So that could be breathing in some sigh of relief for IEX, which has been in a downtrend. NTPC, we've seen the net profit grew by about 14% at 5,380 crores. What we've also seen is that the net profit in the year ago period was 4,726 crores. The total income, however, fell to 45,197 crores versus 45,384 odd crore rupees right there. So those are some of the key details and the earnings that we will be looking at Shail today.
Ladies and gentlemen, it's time to welcome Mr. Mayuresh Joshi, the Director at Equity Research at William O'Neill India, and a little later we'll also have Mr. Rakesh Arora, founder for GoIndiaStocks.com, joining us. But Sakshi, let's look at some other stocks where you've seen fantastic performances when it comes to this week. Let me start with City Union Bank. Again, the counter is up 10% in this week, and these are salutary moves because you've seen the broader markets being very, very weak. And if you have a contra call where stocks have outperformed based on tailwinds, those are the ones that you need to follow when our own market on the broader side turns. Look at Coforge, 6.7% higher. This is at a record high. Mid-cap IT and private sector banking was singularly responsible for keeping the market afloat on the long side as far as those 4 or 5 trading sessions are concerned. And if there is Coforge on the long side, how can Persistent be far behind? 3.2% higher, ladies and gentlemen, over the last 4 sessions, driven primarily by a very, very strong set of earnings in the second quarter as far as the earnings are concerned. ICICI Pru Life, this is a counter 767 and up to 2.5%, again at a record high. So these are the 4 or 5 stocks that one needs to look at on the long side. And of course, when you talk about stocks in particular, there have been instances of very, very heavy selling. Yesterday's dramatic sell-off on Hindustan Unilever comes to mind, 5.5% lower yesterday, and the pain that you see on Lever seems to be at a price point where sensible buying should come in. 8% lower on a weekly basis, and that's also pulled down stocks like Nestle. Britannia is down 5%. Tata Consumer is down 9%. Remember, these are all earnings-led sell-offs. So Tata Consumer, Nestle and Hindustan Unilever from the same FMCG pack have been in pain all of last week. When will buying emerge? Only time will tell, but these are strong stocks, strong balance sheets, and they need to be purchased. Remember, Nestle, Sakshi, is down 20% from its most recent high, and this is perhaps a time to look into it. Bajaj Auto is down 20% from its most recent high. You have Hero Motors down 16%. Part of it is profit booking, but part of it is also opportunity. Sakshi.
Absolutely. Let's also look at some of the other brokerage houses reports that we can look at today. Nomura has come out with a report on Colgate. It has a reduced rating with a target price of 3050. It says Q2 was below estimates. Volume growth, however, of high single digits was in line, but OPM contracted sharply by 200 basis points year on year on higher promotions and investments. They also expect pricing growth to be flattish to low single digits over the near term as well. On IndusInd Bank, we have reports coming in from Goldman Sachs and from HSBC. Both have come out with lower targets. Goldman Sachs has a buy rating but a target price of 1430. They believe weak quarter two with core PPOP has disappointed yet again, which is down 8% sequentially. It's also missed the Goldman Sachs estimations by almost 8%. They also believe credit costs have spiked partly on contingency buffers, leading to PAT miss by 40%, and therefore they have cut the FY26, FY27 estimates, EPS estimates by 10 and 9% respectively. Now, when we look at HSBC, it has a buy rating, but it has slashed the target price from 1770 earlier now to 1510, although it's still higher than the current market prices. Microfinance loans, as per them, have led to the weakness in performance, and adverse movements in loan growth and NIMs and credit costs have definitely disappointed. So those are some of the reports that we have, but let's welcome Mayuresh Joshi, Head of Equity Research, William O'Neill India, now to join in on the show with us. Warm welcome to you, Mayuresh, and thank you so much for joining in. Well, the festive spirit is in the air, although it's missing from the D Street. I wish you all the best for the upcoming festive season, and season's greetings to you, to your loved ones, and your team members at large too. Tell us, is the downturn that we are looking into the markets giving you any sleepless nights, or actually you are happy that at least this sale has come in so you could buy all the stocks that you could not earlier in the one-way run-up?
Let me reciprocate. Heartiest Diwali greetings to you, Shail sir, to your family members, to the viewers of your channel. Hope this Diwali is a very happy, prosperous, healthy and a wealthy one. Coming to sleepless nights, no, I don't get perturbed because I have seen cycles like this in the past. And I think I have a very relaxed sleep in the night. Because if you probably look at the market construct, ultimately I think corrections are part and parcel of the market. A lot of people have not been able to get into the markets, unfortunately, in the last 1.5 years, waiting for a big dip to probably come, which is not happened. But the structural story for India continues. And we've seen that markets never act in a linear fashion. So I think even in bull phases that we saw from 2004 to 2008, you had corrections in the market, and these corrections are very, very healthy because they keep the sanity in the markets in respective bounds. So yeah, not too perturbed. I don't think there is a structural downside story unless there is something which we are not expecting at all on a geopolitical front that goes on, or earnings go down the cliff, which doesn't seem to be the case, at least at this juncture. There might be softness in numbers, but there might be recovery. Yes, US debt exceeding 35 trillion is a concern from a macro standpoint. But I think that's for later. So at least at this point of time, I think these corrections give good opportunities for us to keep on scanning in the markets for good areas to hunt.
Good morning, Mayuresh, and a very warm welcome. As always, festive greetings to everybody at home, to you all at William O'Neill, and of course, the customers that your wonderful company has. Let's start with the FMCG space. Terrible week. Tata Consumer down 9%, worst performing stock in F&O for the week gone by. Lever has sort of disappointed like nobody's business. And we see Pain and Nestle as well. What's happening to these brands? Two of them mentioned that the Indian middle class is actually contracting. Do you actually believe this, or is it just the management which is unable to understand the buying psyche of this new Indian middle class that is in place? What do you think is wrong according to you?
So, Shail sir, again, I think Diwali greetings to you, your family, and hope you have a good year ahead, full of peace, prosperity, and wealth. No, I don't think so. I don't think so. I don't think the middle class is shrinking in the first place, because if you probably look at asset managers, right? You look at Anandarathi Wealth, you look at WAM 360, and they've got a very, very interesting slide where they've actually put out a pyramid in terms of how the classification of income is probably happening in the Indian diaspora. And over 2030, over 2035, they've actually said that the middle class will grow substantially. So the wealth will grow. We are already at $2,500 per capita. That is expected to grow exponentially over the next few years. So I don't think the middle class is shrinking. It is in fact expanding. Second thing, I don't think the companies have got it wrong. Obviously, I think urban demand, rural demand. Rural demand was the weak leg a few quarters back. That is recovering, but urban demand is probably just shrinking a tad bit. And I think a large part of that reasoning can also be because of monsoons and excessive flooding that we've probably seen in most parts of urban areas, unfortunately, over the last few weeks. Does that normalize over the next few weeks or in the second half? Do consumption patterns actually change over the next few quarters? I really don't think so. I think it might be a blip for a quarter or two. But I think urban consumption should stabilize and rural consumption should come back. And therefore, I think these discretionary themes should come back in focus to answer your question.
Okay. Mayuresh, what's happening with FMCG this week was perhaps also what was happening in the auto, especially the two-wheelers last 2 weeks as well. Do you really see all of this as great signs of a consumption slowdown? Could it escalate further from here? What should one really understand this? And, will this really go on for some more time than we can fathom?
No, so Sakshi, I think there are definitive patterns that play out, right? So I said one of the examples, one of the reasonings might be monsoon, it's excessive flooding in urban areas. You've also seen inflation inch up a tad bit, which has probably stabilized to a certain extent. And as the Kharif production has been good this time round, as that starts coming through, I think the core food inflation should start heading lower. The second element in terms of discretionary spending patterns, when it probably comes to key FMCG companies itself, you might see a tad bit of a slowdown, but it's not that you're not going to consume these things. You would need these things either in your daily life or the habits that you've probably developed over a periodicity of time. And therefore, volumes might come down a tad bit, but do they shrink as a permanent feature? Absolutely not. So I'm saying it's a temporary phase that probably these companies go through, but they revert back.
Sakshi, another point and which Mayuresh may want to confirm is that all these companies have raised a royalty to their parents. So that is impacting the top line, because top line is royalties is a percentage of the top line. And then you have that trickle down impact on the profit after tax. And of course, people presume that Indian FMCG players are sitting quietly and not watching this. You don't have the same problem with Patanjali, right? Management cost at Patanjali is dramatically lower. Advertising cost at Patanjali is dramatically lower. And of course, it pays no royalty to anybody. So there are many line items in the balance sheet and profit and loss account which are actually the cause for this, and not shrinking middle class. Mayuresh, would you have a view?
I would concur, but again, I think let's look at this Shail from a different perspective, right? A lot of the MNC majors who are levying loyalty on their Indian subsidiaries, their overseas subsidiaries are not doing that well. They're seeing India as a huge mass consumption market where growth is expected to come through, and if they're increasing royalty, they're probably seeing confidence that the Indian subsidiaries can probably deliver. So I think, to play a devil's advocate, I think MNCs are probably seeing much more value in Indian markets and Indian subsidiaries. A tad bit of royalty increase, yes, it does hit their margins to a certain extent. But if that gets compensated by larger numbers in terms of volume growth, which is a key essential component for a lot of FMCG companies, I think that number probably then gets adjusted as we go ahead into margins and the bottom line. So not to pretup on this, I think the overall growth still persists, sir. The bottom line is very, very clear. Are valuations expensive? Yes. Is price action excessive? Probably yes. The correction is probably happening because of that as well. But it's not that the FMCG and the consumer discretionary story is written off in the
Okay. Then Mahesh, could you help us understand where are you going to be really looking at to add positions in this current market? Has anything afresh come onto your radar in terms of any sector or stocks?
So, Sakshi, I think two, three spaces. One, obviously, I think banks have given good set of numbers, albeit a few banks which probably did not meet the criteria. PSU banks selectively, I think, are looking attractively placed, both in terms of valuations, the basis that we see at markets within India. A few of the private banks are probably looking attractive as well, and valuations in the comfort zone. The second element is also a little bit of consumer discretionary, because my strong belief is that the second half will throw up positive surprises for the reasons that I mentioned in my opening commentary as well. And therefore, a little bit of these rural-focused themes can actually do well. So Bank of Maharashtra, as an example, is something we continue holding in our global portfolios. Axis Bank is something we keep holding in our global portfolios. Bank of Baroda is something that we keep on holding in our global portfolios. A few of these rural-focused NBFCs, as interest rates start trickling down, and as the confidence comes back in terms of rural spending, Chola Investment and Finance is something that we're keeping on our radar. Qualitative management, asset quality pressures coming off slowly and steadily would come back down even further as rural economy improves significantly. Provisioning is decent, capital adequacy is decent. Swaraj Engines, very good set of numbers in my opinion. So if the rural economy has to recover, tractor growth has been substantial. It's a proxy to the entire rural and the tractor story. And therefore the numbers in terms of volumes for the first half, 88,000 units against 78,000, decent top line growth, margin expansion, robust balance sheet is something to be watched out for. Cement companies, actually, my own sense is that consolidation that is happening in the industry, pricing remaining in their favor, even if input costs go up, they positively pass it through, which means absolute EBIT and EBIT per ton should show signs of stability and improvement. As the sector consolidates, my own sense is that there can be decent growth over the next few years, with energy costs remaining stable, logistic costs remaining stable. I think there is sufficient enough of earnings growth as we see it in the MS markets with India with our EPS figures. So a few of these themes look at.
Okay.
Ladies and gentlemen, the pre-open is upon us on this last working day of the week. Let's hope we have a nice strong green tick, and I'd like to start with positive news. Ladies and gentlemen, let's look at the blowout that's happening on Dixon Technologies. 10% higher after second quarter net profit surged 133% year on year, and top line surged 113%. Is this momentum likely to be chased? Only time will tell, but a gap up and a first circuit of 10%. Let's look at how ITC is reacting to earnings as far as prices are concerned. You have ITC 40 paise higher, 472. Let's look at the top performing Nifty stock this week. HDFC Bank 13 rupees higher, 1763. Ladies and gentlemen, HDFC Bank is up 3.5% in this week. Had this stock not been here, you would have seen sub 24,000 levels on the Nifty. What else is buzzing? Axis Bank, the company receives RBI permission for its chairman and managing director to continue for another 3 years. That's a very, very big positive. The gentleman has brought in immense change and a lot of good tidings to Axis Bank. How about Reliance? Reliance is 13 rupees higher at 2693. How about Infosys? Infosys 1864 flat. TCS flat 4048. How about Hindustan Unilever? Yes, remember this stock was thrashed beyond visibility yesterday because of terrible numbers. 14 rupees higher at 2519. Is this a dead cat bounce which will be sold into? Only time will tell. But let's look at the cash counter space where you will see a lot of hectic activity on the gainers side. Dixon rock solid 10% higher. Godrej Consumer Products post earnings strong 5.8% higher. Remember, the sell-off had already happened because of levers problems. Amber Enterprises, no stopping this counter, again earnings led 3.9% higher, 6500. You have IEX 3% higher. Buyers return on KPIT, it posted a terrible set of second quarter numbers, was down 14% yesterday, seems to be seeing strength. City Union Bank, the top performing stock in the FNO space, post its earnings, up 2% at 173. What's losing ground? Let's just take a look at it. IndusInd Bank, down 10%. Again, earnings led 1152. GMR Infra pain around 4% lower, 79. Petronet LNG post earnings 2.3% lower, 330. You have BPCL in the green, 0.5% higher, but that's about it. The Nifty is settling 26 points higher. Let us see if we get 24,500 on the charts. Mayuresh, coming to you. Let's discuss IndusInd Bank at a time when private sector banks are providing a lot of comfort to the broader market, as also to the Nifty and the Bank Nifty. What do you think is wrong with IndusInd Bank? This is at a 52-week low and down 10% today. What are the numbers telling you?
I think three broad factors, Shail sir. I think one, asset quality pressures have probably become even worse, and that is what the expectation was, that it should at least stabilize. Second, I think to cover these asset quality pressures, obviously the provisioning has gone up substantially. And third, I think in terms of their business segments itself, what kind of growth do we really expect, specifically in terms of vehicle and their credit card segment, is something to be seen. You also saw some softness in Kotak's credit card business. So I think problems persist in terms of the core banking operations for IndusInd Bank. And even if valuations probably are very, very attractive, I think numbers is something that is not improving at all. When there is hope, numbers will improve. And you're seeing that kind of a reaction on the prices.
Okay, let's look at how some of the other stocks are moving in trade right now. Let's look at L&T as well. Remember, UBS has downgraded the stock to neutral, cut the target price to 4,000. And this is after they believe the cash flow is key amidst the low appetite to grow orders, and supportive core earnings are going to be seen. L&T right now is trading at about 3,401 odd levels, and 1.2% downtick can be seen on this. Let's look at Laurus Labs as well. There's again a Citi report with a sell rating on this one, and a 320 kind of a target coming in. Another subdued quarter, flat revenues, another for 1.5% down in trade for this one too. Let's also look at some of the other stocks. Let's look at Aarti Drugs, for instance, within the pharma pack again. Here again, we've seen all across the board the earnings disappoint, 1.3% lower for this one. Let's look at the insurance space. Go Digit has come out with a 16% uptick in the total income to 2,175 odd crores, and the net profit has come in sharply higher at 89.5 crore rupees, although it's below the estimates, 3% higher in the pre-open trade. Let's also look at Oracle Financial Services Software. Here again we had talked about the earnings. Consolidated QOQ numbers definitely show revenue down, EBITDA down, net profit down, and also the margins down in trade. Across the board there has been downtake, but this was one of the stocks that we had been continuously tracking. Oracle Financial Software Services, let's pull up that stock to see how that one, I think the prices are not coming in yet. We'll touch base upon it yet again. Okay, so we do have a 1.9% downtick on this one as well. So those are some of the stocks that are actually reacting downward right now. Mayuresh, any safe space or safe haven do you really see in the markets right now? Is it going to be the gold related stocks?
So again, I think typically when you see in a market like this, I think pharma comes to the rescue, FMCG comes to the rescue, but we've seen the problems that FMCG commentaries have done to FMCG stocks. So typically, I think safe havens become typically pharma and IT. IT has moved significantly higher. Mid-cap IT, as I've been time and again saying, have again posted good set of numbers, very good commentaries, but again, valuations, late stage basis is something that does not prompt us to probably take aggressive positions out here. But yes, pharma is something that can probably act as a safe haven size.
Okay. Mayuresh, I think the
Right.
markets are now settling in the 24,418. That could be indicating of a positive start at least. That's a big breather. We've also seen PSU banks show up in trade yesterday. Some promise coming back. You did talk about Bank of Baroda and Bank of Maharashtra also. Some of the stocks that you would continue to keep an eye out on. On the Nifty, it seems like Axis Bank is the one that could be the top mover along with ITC, HCL Tech, Powergrid and BPCL. These are the stocks. And again, consumer durables, discretionaries is a space that Mayuresh you've talked about. That seems to be in the positive zone again, 1% higher. This positive, I hope it sustains throughout the opening and the day as well, because we are seeing most of the sectors inching towards a participation in the trade. But let's come back to the FMCG space again and the consumer basket. Any key names that you would really prefer over the others? We've seen most of the earnings come out within this basket. What continues to look promising?
So I think one stock in that basket which are keeping on our watch list, Sakshi, is Jyoti Labs. I think the leadership that it has in the fabric whitener segment, 33-34% share in terms of top line, the dishwashing segment, and also the anti-malarial segment. I think all these aspects work wonderfully well. They've got a strong market leadership position. Gross margins have held up well in the previous quarter. EBITDA margins also have held up well in the previous quarter as well. Very, very robust balance sheet. And our expectation is that the manufacturing or the volume growth should probably remain far more stable, because even if urban consumption probably slows down, I think all the elements that Jyoti probably makes in terms of urban, semi-urban, I think the volume degrowth might not be as stark. So I think this is one stock out of the pack that we're probably.
Okay, let's look at some other prices that are moving in sync and in tandem with the sensibilities. Bank of Baroda is the earnings candidate for today. Please keep this counter in mind. 244. It's been rock solid. In all this pain that you see, Bank of Baroda has just lost 1.5% in the month of October against 6.5% decline in Bank Nifty and of course 8-9% decline in the Nifty, and carnage across the board. So keep Bank of Baroda in mind. If you look at the year-to-date performance on Bank of Baroda, this is also amongst the top gainers, up 5.5%, 7%. Let's look at the PSU theme. How is that opened? PNB Housing. Again, this is earnings led, 4% higher. I want to see what NTPC is doing. The numbers were really good. NTPC is in front of the screen now. The counter is above 400. That's how the markets have settled, ladies and gentlemen. 24,418. Will we see a nice green uptick for the remainder part of the day? Only time will tell. But let's speak to Mayuresh on NTPC. Your thoughts here, Mayuresh? Good set of numbers, and of course one of those outperforming stocks for the year to date 2024.
Yeah, and I think the entire premise here is again in terms of the renewable portfolio that the company is expected to ramp up over the next few years. So I think that is going to be a huge positive in terms of creating a mix which is from thermal to renewables over the next few years. And again, I think thermal capacity is with PLFs expected to be significantly higher, will probably ensure that numbers remain far more stable. The point in terms of expanding capacities and the kind of capex that they'll probably do, I think the capex to capitalization ratios, like in the case of Powergrid, should be probably in decent territory. And because of that, I think a large part of leverage, even if that gets built up on the book, I think that gets utilized in terms of assets being probably put to work. And as that capitalization happens and recognition happens on the P&L, and as revenues start trickling in, I think the expected earnings should also improve. But dividend yield, again, a very, very strong factor for NTPC, one of the strongest outperformers within the large caps in the power space. But again, power space is one space with the government initiative should keep on doing well. So anybody holding on to NTPC should continue.
Okay. Apart from this, Mayuresh, on the broader markets, just wanted to ask you to mid and small caps have actually lost more ground. And of course, these were the spaces that were the erstwhile performers in the previous rally. Do you think a large part of the froth is now already taken out? Can one still look at the mid and the small cap spaces afresh now with this kind of an downturn now underway? Or maybe, gradually keep looking at it? What is the ideal strategy to look at both mid and small caps?
So I think keep on watching, as simple as that. I think if there are further cracks here, look out for areas where the cracks are even deeper and where earnings will probably hold out over the next few quarters. Because actually, ultimately, earnings is something which will drive the markets.
Yeah.
Liquidity point has taken the markets to the levels that it were. But earnings will drive selectively pockets within mid-cap. So I'll just give you a flavor. Example, the defense stocks, right? They have actually cracked
Yeah.
30 or 50%. If they crack further, I think they will make a decent case because valuations will normalize. The expectations in terms of them making good lower basis, as we see it in markets with India, because EPS rating, RS rating, order books, expectations of execution, margin performance, dividend yields still remain in their favor. So if they crack further and if they make good lower stage basis, I think this is one space, just as an example, that you should have on your.
Ladies and gentlemen, we are just seconds away from the markets to open on Friday, the last working day of this week. Thank God the market and traders and investors will rest over the next 2 or 3 days, figure out where to put in money. But for the moment, it's a green tick on the Nifty, 31 points higher. The IT index is flat, 42,135. Nifty Bank is opening on a back foot, 64 points lower. The Nifty 500, something that I watch very closely, is up 40 points. That's a very big plus. Okay, let's go to Market Watch and see what's helping the index. Firstly, ITC 8.8 rupees higher, 480.2. This is a bounce that is happening from 50-day exponential moving average post earnings. This is something to be watched. Hindustan Unilever in the positive, 8 rupees higher, 25.13. after yesterday's 6% sell-off. HDFC Bank flat, 1748. ICICI Bank 4 rupees higher. The star of the day, ladies and gentlemen, is Axis Bank, 26 rupees higher at 1193. The earnings were really good. The top post of the CMD, the gentleman has got permission from RBI to continue for next 3 years. That's a very, very big positive for Axis Bank. We'll get Mayuresh's view on this one. And of course, you have Infosys 8 rupees lower, Reliance 10 rupees lower. So it's even Stevens as far as markets are concerned. Stocks to watch, 5% on Radico Khaitan, very strong set of numbers, 2404. This is a record high. Let's look at what PNB Housing is doing, 8% higher. Digit change, 1012 in front of you. How about Dixon Technologies? Muted. So probably the numbers were getting reflected already in price. 1.5% higher, 15,306, fresh record high. IndusInd Bank, the top traded counter and in immense pain after earnings, down 10% at 1152. Mayuresh, coming to you. ITC, does it make sense at these levels post the earnings? And of course, if you would want to comment on Dixon Technologies.
So for ITC Shail, I think numbers were decent. Again, a large part of their business model, which skews towards cigarette business even now. I think there the EBIT margins and cash flows still remain strong. Irrespective of the slowdown that we're talking about, cigarette consumption will still happen because of the investments. The hotel business holding up, expected to hold up as we head into the second half, rural showing signs of recovery. So yeah, steady state performance expected from ITC. But my only concern for ITC, Shail, would be that a lot of their cash flows will now get reinvested into the new businesses that the management spoke about. So incrementally, return on capital employed will still remain suppressed because of capex going into other free cash flows going into fresh capex, and that might not probably reflect in terms of numbers, at least for the next few quarters. Dividend yield is very, very decent. Yeah, so I think stability is something that can get expected from ITs. For Dixon, I think as a clear disclaimer, we hold the stock in our portfolios. Decent set of numbers. The expectations in terms of this entire space as it comes to PLI schemes announced by the government, the expectations in terms of more ODM, which is the original design manufacturing component, moving higher with EBIT margin significantly higher than the outsourcing part. More orders coming their way, backward integration that is expected to happen, and China plus one. I think all these elements probably look in their favor. The PCB part of the market for Dixon specifically, as we head into the semiconductor space in the next few months and quarters, will be very, very interesting. And therefore, this is one huge value added component that can actually come through for not just Nissan, but a lot of these EMS providers as well. Are valuations expensive for a lot of these EMS players? Absolutely, yes. But is there scope for good momentum to continue because of numbers which can continue at a good pace? So I think we'll wait out for commentary on what the management is saying. But as a clear disclaimer, I will continue holding this stock at least at this moment.
Okay, Mayuresh, how about the IT space and where exactly would you find newer opportunities? Would it fresh money go towards the mid-cap IT space again, looking at Coforge, persistent emphasis, the kind of earnings that have come in, even scientists pulled up today after the earnings as well? Or would you stick with the large caps? What is your strategy there?
The entire space, I mean, if you look at valuations, it's trading above its mean standard deviations, actually. And obviously, we've liked a few mid-cap IT companies that have been giving these disclaimers time and again for the last few months, and they've performed extremely well. But it does not give, at this juncture, though, late stage basis, as I said, valuation very, very expensive. If you're holding, you can continue holding, but keep on monitoring how the numbers are. Commentaries have been very, very positive. Persistent, Coforge, emphasis as an example. They're seeing good order books getting ramped up, pricing not to be an issue. They're still expecting execution to continue in a very robust fashion in typically weak quarters as we head into the second half. We'll see a lot of furloughs in Q3, discretionary budgets getting formed up in Q4. Irrespective of that, they are upping up their guidance in terms of execution. But again, I think these two concerns probably remain. So as a space, yeah, you can continue taking fresh investments. Unfortunately, we'll have to wait for it.
9:20, ladies and gentlemen, and I would like to discuss Radico with Mayuresh Joshi. Mayuresh, Indian liquor is outperforming foreign liquor. United Spirits, Pain, Radico Khaitan, top gainer. What is happening? What are the new brands that you've started purchasing?
Yeah, so thank God it's Fridays, yeah. So I think we can sit here morning show itself. So, no, I think their performance has been really
Festive spirit.
Yes, it's the festive spirit. And the performance has been stellar. So if you probably do a little bit of a comparison of what United Spirits has done and what Radico has probably delivered, I think there has been premiumizations for the industry as a whole. Because of premiumization, you've probably seen the net sales value or the net sales realization, NSR, as these companies call it, improve. Volumes have probably improved as well. Or Pushoya gum, Shail sir, I think this is one space I think a lot of the market folks also probably go for. So I think keeping that aside, I think margins have remained stable and the input costs, which largely increased a few quarters back, including molasses, should largely stabilize going forward as well. So I think this entire team probably will.
Actually, it's the sweet spot that the market has rewarded very well as far as Radico is concerned. Lots of new brand launches coming into from the company, and this is an age where a lot of experimentation is happening with Indian-made foreign liquor. A lot of Indian scotches are far more expensive than scotches made in Scotland, and more importantly, India is now turning into a gin drinking country from the lovers of whiskey that were there in my age group. So these are the changes that are getting reflected in Radico's portfolio, and that's the reason why you see this sharp appreciation. Look at operating profit margin. For the quarter gone by, it's 15%. In the June quarter, it was 13%. And in the year ago quarter in September, it was again 13%. So this is the premiumization that is happening. You see sales growth, you see profit growth higher than sales growth, and that is the reason, ladies and gentlemen, why the market is rewarding Radico Khaitan with this uptick. At the same time, there is problem with United Spirits. Their sales are actually either stagnant or in some cases slowing. So that's the liquor story ahead of Friday and ahead of the weekend and ahead of the festivities, ladies and gentlemen. Radico is doing very well. I want to show you Dixon Technologies now slipping lower, 3.5% down, 14,053, 14,535. So probably results were already impacted and reflected in stock prices before that. Reliance is flat, Indus down 10%. Remember, this is an F&O stock. Now this price is what you saw in May 2023. When will bottom fishing emerge? Only time will tell, because you see the circuits work very differently in the case of F&O stocks. The next circuit will be 5 percentage points lower, 15 and then 20 and then 5 more. I'm not saying that those are going to happen on IndusInd Bank, but F&O circuits work differently. PNB Housing, Mayuresh, this has been one of your favorites and very strong set of earnings. What is your view on the counter?
Sorry, I muted this. Yeah. So strong set of numbers. So if you probably look at how the asset quality has played out, their NPAs, if I'm not mistaken, 1.25 odd percent compared to 1.35 last year, around 1.8 in the previous year. The return on assets have improved significantly. NIMs actually at 3.68% compared to 3.65. So in the case of a few housing companies, Shail sir, I think if you look at PNB, if you look at Canfin, I think the NIMs have actually remained very, very stable. And again, I think that's the perspective that I was bringing on board, that as interest rate cycles keep on happening, the well-capitalized housing finance companies should start doing well. Because if you look at the cost of borrowing, a large part of them come from banks, a large part comes from the NHB and CP and CD. So I think there will be incremental lower cost of borrowing. And as advances growth improves, maybe the spreads show increasing improvement as we head into the next few quarters, with improving top line growth as well. Again, valuations really not expensive, even at this juncture. It's not sky high, it's not cheap as well, but they are very, very manageable in terms of how future growth forecasts can probably come through. So I think both these housing finance companies are given good set of PNB as well as.
Okay, got it. There's one of our viewers, Mayuresh, who's asking, Shoaib Azmi is asking, Zomato कहाँ तक गिरेगा? आज आई थिंक 252 पर है ये स्टॉक एंड एन आउट परफॉर्मर रहा है इस पूरे साल में, और काफ़ी इन्वेस्टर्स एनालिस्ट का एक फेवरेट स्टॉक भी रहा है जिस तरीके से इस स्टॉक ने परफॉर्म किया है। और अब लगातार एक चीज़ तो साफ़ है अभी के हाल ही के जो अर्निंग्स आए हैं कि प्रॉफिटेबिलिटी के ऊपर क्लियर फोकस आ चुका है, चाहे वो लगातार फीस हाइक करने से हो, प्लेटफॉर्म फ़ी, या फिर ब्लिंकिट को इस कदर बढ़ाने से हो कि आपको सुई से लेकर अगर आपको सिलाई मशीन भी लेनी होगी तो भी आपको अब ब्लिंकिट से मिल जाएगी। तो इस तरीके से आप जोमेटो के किस तरीके से देख रहे हैं?
एक सिर्फ पॉइंट ऐड करूंगा कि बात ये भी चल रही है कि शायद स्कॉच की डिलीवरी भी फूड डिलीवरी एप्स करें। सो कीपिंग दैट असाइड, आई थिंक तीन चीजें। एक, आई थिंक जो इन्होंने नए स्टोर्स खोले हैं, 152 नए स्टोर्स खोले हैं, 7 नए वेयर हाउसेस खोले हैं, और रिस्पेक्टिव ऑफ दैट ब्लिंकिट का जो परफॉर्मेंस रहा है ये सराहनीय रहा है। तो एक्सपेक्टेशन यही है कि जैसे इसमें वृद्धि होगी स्टोर एडिशंस में, और जैसे ऑपरेटिंग metrics सुधरेंगे, which they have mastered the art, I think Blinkit will come back into profitability before the year end. Hyperpure के businesses में every passing quarter losses कम होते जा रहे हैं। जो core food delivery का business है वहाँ पे margins अच्छे खासे stable में इनफैक्ट बढ़े हैं तिमाही दर तिमाही। 10,000 करोड़ की कैश है। मुझे अभी भी याद है पिछले शुक्रवार को हमने डिस्कस किया था QIP की क्या जरूरत है। I think it's a very smart move. Competitor IPO लेके आ रहा है, they are getting loaded with cash to probably counter anything that the competitor might probably offer with the capital raise. तीसरी चीज जो बहुत महत्वपूर्ण है, इन्होंने प्लेटफॉर्म फीस बढ़ाई है साक्षी। तो 7 रुपए से लेके इन्होंने प्लेटफॉर्म फीस 10 रुपए की। इट्स अ वेरी स्ट्रेटेजिक मूव इन द कॉन्टेक्स्ट की दिवाली में ऑर्डर अच्छे खासे निकलेंगे। आज 12 से 14 लाख ऑर्डर निकलते हैं हर महीने। तो आप सीधा हिसाब लगाइए, इनफैक्ट डेली बेसिस पे, सॉरी, तो आप सीधा हिसाब लगाइए 3 रुपया इंटू 10 लाख ऑर्डर, यानी 30 लाख की वृद्धि ऐसी। तो अभी आप डिसाइड करें जोमेटो के साथ।
बिल्कुल।
मयूरेश जी, ऐसा कोई बिजनेस मेरे और साक्षी को भी शुरू करवा दीजिए।
सर मैं भी आ जाता हूँ, विल बिकम एंजल इन्वेस्टर।
आए, दिल्ली आ जाओ, आप दिल्ली आ जाओ। भीकाजी फूड्स, रेडिको, दोनों दिल्ली की कंपनियां। Okay. Okay, ladies and gentlemen, I think we need to pay attention, more than the required attention, to ITC. Index Nifty is up 24. Out of these 24, 33 points have been contributed by ITC. When was the last time you saw ITC contributing such an outstanding and how should I say, overbearing impact on the Nifty? Very strong set of numbers. In fact, actually the chart was very well positioned. 50 DMSA, a very strong bounce back, and this is what is getting rewarded by the market very well. So if you have good quality earnings, look at how markets are rewarding. ITC is the top performing counter in the Nifty, up 3.8% today. Radico is going great guns, now 5% higher, and of course you have Cient Limited also. Cient also came out with its earnings, that is doing pretty well. And let's look at a list of all-time highs in this kind of a market. Okay, we've discussed Radico and Dixon. Anything else I would like to mark? Okay, no, we'll keep quiet, we won't mention these names. We've discussed PNB Housing. So far this is how the markets have come up with. Let's because it's 9:29, let's dip into the broader space and see how other indices are performing. The Nifty is now up 35 points, and that's good news. Let's look at the other outperformers as far as this space is concerned. Nifty FMCG index is the top performer after yesterday's thrashing, so value buying coming into the counter, 1.7% higher. Sakshi and I track 19 indices for you. Out of 19, only 6 are in the green. The top losing index is the Nifty Alpha 50, 1% lower. Small caps and mid caps are down. That's not looking good, 0.6% down each. Advanced decline is terrible. 606 stocks are in the green compared with 1585 that are in the red. So the market breadth, ladies and gentlemen, has turned negative, and you just might see Nifty slipping back into the red. So any bounces towards 24,500, 24,450 are met with call writing, and possibly more shorts being added to the index ahead of the weekend. Mayuresh, what looks good in the market?
Sir, I think one space और एक ये थोड़ा आउटलायर जैसा हो सकता है. टेस्ला के कल numbers आए, and Tesla has given solid set of solid set of commentary. So instead of 15%, 20 to 25% growth, Tesla is exploring markets like India. जो टेस्ला को एंसिलरीज प्रोवाइड करती है, जस्ट अ हिंट, उस पर ध्यान रखिए. अगर डिक्लाइंस आते हैं तो यू नेवर नो व्हाट हैपेंस, राइट? जस्ट अ एग्जांपल ऑफ व्हाट टेस्ला एंसिलरीज आर: सुप्रजीत इंजीनियरिंग, एसकेएफ बेयरिंग्स.
Okay, Suprajit Engineering, which is the next one that you said?
एसकेएफ.
Oh, SKF. Okay, we will be keeping a keen eye out on all of
ये
this.
it's just a presumption.
Yeah.
If Tesla is expected to grow exponentially, if India market is something is exploring, these ancillaries come in flavor just to fulfill its demand.
Okay, the market has turned completely defensive, viewers. We are seeing FMCG up 1.5%, pharma up 0.5%, and IT up 0.2% higher. Rest of the sectors are now slowly and gradually slipping into the red, with consumer durables having lost about 1.3%, metals, realty, broader markets down by 0.8%, both of them mid and small caps, autos, oil and gas, infra also down in the red. Pharma space, let's discuss, Mayuresh. How are you looking at this space, and which end of the pharma space would you go with right now? The main place, hospital chains, or the diagnostic majors? How would you really segregate between the three?
No, so I think the core pharma companies, we continue holding an Auro, a Cipla, Dr. Reddy's in our portfolio. But look at the mid-cap companies, right? Syngene came with a very good set of numbers. In fact, Syngene is a case study, Sakshi. If you go onto their site, you can spend a day understanding about them and their business model and things they are doing. Piramal Pharma came with a good set of numbers. Assumably, I think expectations are numbers will be good. Hospital chains have done well. So you've probably seen good numbers in the previous quarter from a Max. You saw good numbers coming through from Narayan Dudla as well. Apollo Hospitals has always been the leader in this space. Diagnostics also, I think, cash-rich companies, if you look at Dr. Lal's, they're sitting on a huge pile of cash. The specialized tests as a percentage of the overall tests are improving and increasing every passing quarter. And therefore, I think the expectations in terms of diagnostic plays actually performing with a very stable expectation in terms of more patients coming their way just for testing or otherwise. With decent revenue per patient, it's almost at 850 rupees for Dr. Lal as an example. This will keep on increasing because of the specialty part of the component actually increasing. So yeah, selectively, all these spaces probably look well.
There's a 4% uptick, ladies and gentlemen, on ITC 490, and Pidilite, after a stunning set of numbers, is proving true to its, how should I say, signage. Fevicol ka mazboot jod, 2.9% higher, 3212. Mayuresh, thank you so much. Very kind of you to join us, and of course, once again, festive greetings. We hope that the pain that is there in the market ends with this week, and from 28th August onwards, things will improve dramatically. Have a nice weekend and a nice evening.
Thank you so much, sir. And it definitely will. As our founder used to say, I've never seen a successful pessimist.
Absolutely. And there is one gentleman who's writing in on our conversation that we have online. He thanks you for Bhikaji Foods. His name is Abhishek.
Okay.
Okay, I think just the right time to introduce Mr. Rakesh Arora, founder at goindiastocks.com and a very well-known stock picker plus value creator in the market. Namaste Rakesh ji, a very warm welcome to you, sir. And of course, festive greetings for a great Diwali for everybody at home, as also for all the clients at Go India Stocks. How do you see the market after this massive correction that has happened on the indices over the last 21-22 trading sessions, and what do you think is the way ahead?
So first of all, happy Diwali to both of you and all the viewers of Business Today. I hope that the markets also bottom out and add to the festivity. So all the signs are there that probably we are at the end of the correction. It might take some more time for consolidation here before the confidence really comes back. Meaning these kind of 10% odd corrections normally are pretty frequent in bull cycles. So I don't think we have deviated from the bull cycle theme. It's just that this correction, I mean, a lot of people are not used to these kind of corrections given what we saw in the last 3 to 4 years. But this is a normal correction that we are seeing, and I'm pretty sure that the fundamentals are in place for a much longer bull run. So I don't think we need to get off that train anytime, because of these small corrections.
Okay, warm welcome to you, Mr. Arora, and good to have you with us, and thank you so much for the greetings. I extend the same to you and to your loved ones as well. Like you pointed out that these are corrections that some of the investors are seeing for the first time, and therefore the nervousness, but these are part of the normal course. I wanted to understand from you, in this 4 week of a downward trend, have you looked at any key spots which have looked more attractive to you, where you have done any bottom fishing, any key sectors that have started to look more positive to you, you've started to accumulate them? What would you say, sir?
So largely, our investment is driven by longer term themes, and they don't really change with these kind of, corrections. So, but, obviously certain, themes which were out of reach had become very expensive.
Yeah.
Those are now coming back to the radar for investment, like something like defense.
Yeah.
It's a longer term theme. It's not going to go away in a hurry. Stocks became very expensive. They have seen now 40-50% correction. Maybe, there's another 10% correction, you never know. But, now these stocks are, coming back into that range where one can look to play that theme and invest again. So that's the case with some of the other, sectors also. So I think investors should, identify which are the longer term themes which are going to play out for over the next few years and look to add to their position into those themes.
Rakesh ji, what themes apart from defense attract you? We've seen a similar correction in the railway space, particularly PSU stocks, as also the entire the entire PSU basket. In those spaces, is there anything that has attracted your attention, or do you avoid them in general?
So, talking about themes, maybe there are a few predominant themes which are prevalent currently. One is the revival of capex. We are seeing capacity utilizations touching around 80%. And normally, capex cycle lasts for at least 5 to 10 years. So we are expecting that capex cycle will pick up. Number two is, if you look at the renewable theme, the transition to, uh, carbon neutral economy is just starting. It's going to be a 20-30 year kind of a theme. And we have seen some blockbuster, IPOs happen. I think this theme could be, one of the things to watch out for. The obvious plays might be expensive, but there would be a lot of ancillary plays one can look at. Number three is, China plus one theme is unlikely to be wished away. India was doing a lot with its announcement of PLI schemes to support this, and the progress was a little bit slow because a lot of integration of supply chain with China is there globally, and our relationship with China was not that strong in the last few years. But things are starting to change. So this manufacturing theme, China plus one theme, is likely to come back on track. The fourth theme is, financialization of the economy. We have seen, a lot of people move up their investment from, physical assets to financial assets. And this has been possible because of the digital stack that we have, which is digital payment, UPI, cheap data, and all that. So this theme is also likely to continue in a big way. So there are multiple themes which are there. And lastly, let's not forget the infrastructure theme. India is not yet built. It will take another, few decades to build it to that level. So railways is what you mentioned, but the other, parts of infrastructure will also come into play.
Okay, got it. Mr. Arora, another space is the entire mid and small cap, kind of carnage that we have seen. Is it done for now, or do you think further more correction could be here? And are you looking at any opportunities within this space?
So I think what is really driving this space was, shift from unorganized to organized.
Yeah.
Uh, Post all the reforms like GST, etc., which came in, the incentive to remain unorganized, avoid taxes, is no more the incentive for the small businessmen. And all these market gains have actually taught them that they can make much more through a market cap route than taking out some money on the sideline. So one has to be really stock specific on the small cap. So one needs to do a lot of due diligence because the risk factors are higher. But this, inclusion of smaller businesses into the organized, economy is actually has just started and it's going to take further. Meaning there are more than I think I don't remember the numbers properly, but there would be like 1 crore companies on MCA listed. Whereas in the listed space, we have only like 5,000 odd companies. So the tail is very long, and this, there will be lots and lots of opportunities in micro caps and small caps.
Rakeshji, one sunrise industry that's doing immensely well is the EMS space. We've seen Dixon coming out with a fabulous set of numbers today. Amber M Enterprises announced a similar quarter 2-3 days ago. And with this thaw in India-China diplomatic relations, what are your thoughts on this space? Do you see further traction coming in? If yes, maybe one or two stocks you can highlight where Go India Stocks has a presence or has them on their radar.
So this is an a high growth space that we are seeing. Initially, they all started with small time value addition, either making AC bodies and or washing machines or mobile. Now the big shift is happening. See, the scale of India and China is totally different. Today, if you talk about, say something like solar cells, 97% is made in China. And in India, if we are making like 1%, even if a 5% shift happens from China to India, that's a five-fold growth. So that is the kind of numbers we are looking at. And I mean, these are well discovered stories. The names that you talked about, Dixon or Amber, even PG Electroplast falls into that same space, and there are other companies. I think one needs to really take a longer term view. These stocks do look a little bit expensive right now, but on dips, these. I mean, these are multi-year stories. I mean, can they? The opportunity size is like 10x from where we are right now. So, though it will depend on whether companies are able to do it properly, whether the capital allocation is proper and all that. So those things one needs to check. But as a theme, as a sector, I think this is one very dominant theme, and it's the same China plus one story that we were talking about. So EMS is one part of it. There are multiple themes in this. So I'm very bullish on this theme, and while we don't have any client company in this space, but personally I do, hold on to some of the names that we discussed.
Okay. Mr. Arora, how are you looking at the FMCG space right now? Stocks like ITC post earnings, they have rallied today over 4% higher in trade. Stocks like Godrej Consumer also pulling up. But on the contrary, we've seen Nestle underperform. We've also seen cautious commentary coming in from HUL as well. So what's really happening? How should one really understand the opportunities that present themselves within the FMCG space?
So FMCG space was expected to do better. One, because market was going through a correction, and people tend to move to defensive stocks. But there's a little bit of stress coming in the urban consumer, and we are seeing that in the commentary from Hindustan Unilever. Even on credit card, the stress is coming for banks. Plus, we're also seeing auto sales have actually dropped quite dramatically. So urban consumer is not doing that great as it was expected. There is little bit of tailwind from good monsoon, and rural consumption should pick up. So probably all eyes on that. But having said that, FMCG space is seeing a little bit of turmoil. There would be seasonal uptick because of rural India consumption picking up. But there's also some threat coming in from quick e-commerce and private labels, or these guys launching their own labels. So growth is likely to be a little bit challenged in the near term. I think markets have corrected, so probably investors can move out from some of these defensive names and see if there are opportunities for bottom fishing into more cyclical names.
Rakeshji, how are you viewing mid-cap IT and mid-cap pharma? Some of the classiest stock action on the long side has happened in these two spaces. Would you have favorites in the mid-cap software space? Numbers coming in from the likes of Coforge, the likes of Persistent show strength and perhaps justify the higher valuation and the higher price action that we've seen in both these counters. What is your view, and would you have some clients or personal holdings in the mid-cap IT space?
Well, I don't have too much holding in mid-cap IT, but I do have in mid-cap pharma. And these two sectors are showing a lot of strength in this, weak market. Probably, the US economy is not doing as badly as what, people expected. And the commentary coming out has been decently, positive. Number two is, I think there's a big opportunity opening up for Indian pharma because of the biocare, laws which are coming in. There'll be, a lot of business which will flow to Indian pharma companies. So overall, I think these two sub-segments are likely to do reasonably well. And also meaning they have a little bit of a defensive nature as compared to, the cyclicals that are underperforming right now. So that is also really adding to the flavor. So from investor point of view, when you're constructing a portfolio, you need to take a little bit of a barbell approach. So on one side, you can load on to these defensives, which is like IT and pharma, and on the other hand, you can do a little bit of bottom fishing into cyclical sectors.
Mr. Ora, could you also help us understand, is there any sector or pocket in the market which is still a no-go area for you despite the recent correction that has actually come in, where you would actually feel that some more long-term time correction is going to be playing out, so it's better to be avoided?
Difficult to say, meaning I think there are stock-specific opportunities everywhere because the correction has really happened. And so some of the sectors which were going really high have all corrected 40-50%. So I don't think, there's any sector which is no-go, I would say. Things are looking reasonably okay for most of them. See, what has happened is that, everybody was very bullish on India, and suddenly we are seeing economies showing a little bit signs of slowdown, and we are seeing a little bit of earnings downgrade also come in. And then this China stimulus happened, so there's a little bit of outflow of money. So all these things have really led to a situation where a correction was warranted. But probably I think we may not really break that 24,000 level on Nifty. Uh, I think we should bottom out around this level. And so most of the sectors are largely corrected. Some may outperform others depending on the catalyst, but I don't think there's anything which is looking extremely expensive even at these levels.
Rakeshji, what has been your thought on the second quarter performance of corporate India? There is a slew of disappointment everywhere. Look at how two-wheelers were thrashed beyond belief after Bajaj Auto's commentary on industry growth. FMCG is still to recover, given the pain that you saw in Tata Consumer, in Hindustan Unilever, Nestle in particular, talking about shrinking middle class. What do you think has gone wrong with the second quarter earnings? Why hasn't corporate India responded to what the markets were actually doing, or were markets stupid?
So I think the first half has been, had its own share of issues, which are temporary in nature. Obviously, first quarter we had the elections, which slowed down a lot of things dramatically. Then second quarter, the monsoon this time was much more severe as compared to last year. So that has also played a factor. And number three, I think we all went a little bit overboard, given that the bullishness in the market affects all the projections that we do. So this was I would say just a cyclical factor. It's a seasonality. It's not a change of trend. And sometimes these kind of corrections are necessary to keep us grounded and be more realistic.
Okay. Mr. Ora, another space that I wanted to discuss is the PSUs, which have been correcting sharply in this downtake. Even today, the PSE index is the one which is down over 2%. One of the sharpest losses being seen across the board, which used to be erstwhile favorites. Now, whether it is the PSU banks, whether it is the power space, railways and defense, you've already touched base upon as well. How would you approach the PSU space at large right now?
So the gap between PSU banks and private bank, was had narrowed down to historic lows, uh, and now as things are starting to get a little bit more difficult in terms of credit cost and all that. Private banks have a better, control on their operations. Their efficiencies are better, so that gap is again starting to widen. So people are shifting away from, PSU banks to quality private banks. But this time around, the credit cost and the NPA cycle has been, very moderate. RBI has been very proactive in dealing with any signs, early signs of stress coming in any subsegment, and they have been proactive to take, action. So, post this, decent correction that we are seeing, probably, we are coming to an end in terms of even the PSU, stocks, whether it is banks or other stocks, other regions like energy and all that. So probably, some kind of accumulation one can do. But remember that, private sector would always little bit outperform PSUs in terms of growth, efficiency, and returns.
Okay, got it.
Just to look into the market, Sakshi, a bit of a sell-off in the market. 121 points down on the Nifty, 24,277. Nifty Bank is worst off, 1.3% lower, 666 down. That's primarily on account of the pain that you see on IndusInd Bank. For the moment, we had seen a 10% circuit, but now it's down 14%. So that singular stock itself is pulling the Nifty down dramatically, Nifty Bank down dramatically. Let me just give you some interesting data on how much is IndusInd Bank hurting the Nifty Bank. That is about 148 points. And we also have seen a bit of a sell-off that's coming into HDFC Bank as well. So this is looking to bit painful for today, but that is how life is, and it's only IT that is holding the main index on its way up. Possibly you will see some selling pressure there, some sort of buying happening on ITC, Hindustan Unilever. ITC post earnings, Hindustan Unilever post it was being bashed yesterday. Rakesh ji, one stock, one sector or one set of stocks that have sort of disappointed in the last quarter or so has been the infrastructure space led by L&T. Were valuations the main reason responsible for this sell-off, or you feel that enough has happened in terms of stock prices? Look at how Cummins has corrected. L&T in particular is facing a serious selling pressure. The likes of ABB, Siemens, and the entire infra pack is also on the back foot. What has gone wrong, or is it just a sectoral rotation out of infra?
So actually, the order inflow from NHI and other agencies was slow during the election season, and that hasn't really picked up as meaningfully as people were expecting. But now I'm starting to see a little bit of green shoots where order inflows have started to trickle in. So I think infrastructure space will get support. They are largely driven by order inflows because that gives a good visibility on their revenue growth over the coming years. So as we see more order inflows come in, I think there could be a little bit of bunching up of order inflows in second half because government bodies tend to exhaust their budgets before 31st March. So you will see a lot more coming in the next 3 to 4 months. So I would take this opportunity to really do some bottom fishing in this sector. L&T also has a large, play on the Middle East and all that. So the ongoing tension would have really impacted some of it. People might have taken some money out of this because of that. And that remains a singular risk factor currently, which there's so much of uncertainty and we can't say with any kind of surety. But otherwise, all the factors, are kind of factored in, discounted, apart from this, Middle East tussle that we are seeing.
Okay. Before we let you go, Mr. Ora, we are asking all our guests to give us some festive ideas that investors can probably look at in this sale, ongoing sale in the markets that we are looking at for probably till next Samvat. By the time we get you back and talk to you about the same stock ideas and sectoral picks that you share with us, tell us where do you think outperformance will be seen if one has to buy today? One top sector and 3 top picks, stock ideas.
Okay, so that's a difficult thing that you asked. I like so many names, and unfortunately, I can't take names as yet because our research analyst license is still in process. So, but see, I think it's a difficult call. One needs to do a little bit of, as I was mentioning, barbell approach here. You can't really be too defensive because then you will miss the rebound in a very big way. So I would be, loaded up on, some of the mid-cap IT and pharma at one end. And then I'm looking to, add to all these themes which are there, whether it is EMS or recycling or infra and, on the other end. So, and largely want to stick with small to mid cap because that is where I think the bulk of growth come in. So I'm still not biting the bullet on jumping into that large cap bandwagon. They might outperform for some period of time, but from a 4 to 5 year point of view, which is what my horizon is, I think small to mid cap would be the place to still find value. So this is where I would be, largely looking to stay. If somebody is looking for risk-free ideas, maybe private banks, there are one or two good names which can rebound. Cement sector could be the other one where there's a lot of consolidation happening. Low risk sector, people can look at that. Uh, Even for some of the steel companies now probably might be starting to look cheap and given the China stimulus. So one or two large steel companies, maybe throw in a little bit of aluminum because that is the metal which is in short supply for next 2 to 3 years as per our calculation. So on the commodity, so these are some of the cyclical things people can add in addition to the defensive names that we spoke about.
Okay, Rakeshji, thank you so much. You've been hiding behind this very flimsy excuse that the SEBI license has been not into place for the last 6 months. Nevertheless, we will also continue having faith in what you tell us. But for viewers, yeah.
I was saying,
you were saying something.
Surely will be giving stock picks. So there's hope for the next Diwali now.
Okay, so both Sakshi and I are very, very optimistic in life. We will still give you 365 days to work out the SEBI obligations. But for practical and smart investors, just go to goindiastocks.com. The entire list of companies that Rakeshji manages their IR for is visible. Look at all those stocks on the charts. If they are visible, if they are available at 52-week lows or maybe 21-month lows, then you have the list ready for you. So that's how you sort of work your way around hurdles. Thank you so much, Rakesh ji.
Thank
What a
you.
pleasure
Thank
to
you so
have
much.
you,
Thank you.
and festive greetings once again.
Thank you. Happy Diwali. Once
Thank you so
again, thank
much.
you. Okay.
That, ladies and gentlemen, yeah, happy Diwali to you, sir. And that was Mr. Rakesh Arora, a very well-known stock picker and value investor at goindiastocks.com. We will shortly be joined by Mr. Vineet Agarwal, Managing Director of Transport Corporation of India Limited, India's largest truck transporter, a company that has done phenomenal work over the last 3-4 decades to bring in quality transport as well as logistics facilities in India. Let's look at the numbers before Mr. Agarwal joins us. Oh, of course, he's with us. Good morning, Vineet ji, and a very warm welcome. Festive greetings. These festivities are also visible in your quarterly numbers, a very strong show. Welcome on Business Today, sir.
Thank you. Thank you. It's a pleasure to be here, and best wishes to you and everyone else at the BT studio.
Thank you so much. Right. A very good morning
Let's
to you,
look
sir.
at the numbers before we start this conversation.
Yeah.
Net profit for the second quarter is up 22% at 107 crores. It has risen both sequentially as well as year on year. Sales have gone up by 13% year on year to 1,121 crores, and they are flat on a quarterly basis. Flat sales, sir, but rising profit. How come this wonderful thing happened sequentially? And what are the highlights that you can tell our viewers in terms of year-on-year growth?
You certainly have a high benchmark because 12% is not flat sales really, but yes, it was the growth was not very high in terms of certain sectors with consumption being slightly low. But generally, what happened was the shipping business did reasonably well this quarter, and we've been able to really capture a lot of the increase in freight rates that happened on the sectors that we operate. Other than that, certain sections of the automobile industry has been doing reasonably well. Two-wheelers, for example, not so much the four-wheelers, but definitely two-wheelers have been doing quite well. Generally speaking, we had strong contracts that came in with in our supply chain business. That has helped a little bit also on the top line side. The bottom line has, with cost pressures being slightly on the higher side, has been a little bit pressured with the other businesses, but Seaways has done quite well.
Sir, very good morning to you, Sakshi this side. Wanted to ask you, especially when it comes to the current quarter that we are in Q3, the festive demand also has to come in. Are you bullish about the demand vis-a-vis last year? Especially why I ask you this is because we've seen this year so far there have been one-offs because general elections were there. Because of that, you did see slowdown in the previous quarter as well. Has now that abated, and do you think the festive demand will more than cover up for the lost ground this year so far?
Sakshi, what happens for us is that we are a logistics company that starts moving cargo for the stocking of the festival season much more much well in advance. So for us, that starts happening in August and September, and that is directly visible in our numbers, which is a 12-13% increase on the top line. But that stocking, what happened this year was slightly higher than previous years. That I can say that it is about 5-10% higher, which essentially means that the anticipation of sales in this quarter is going to be higher for our customers, which is on the B2B side. So essentially, we do expect with the good monsoons, consumption to also increase at the rural areas. As I said, two-wheelers has been doing reasonably well. So definitely Q3 should be better from a sales perspective of consumer companies, and that should ultimately percolate down to companies like us as well. The industrials has been doing quite well. So in the last 6 months also, or rather last, I would say 8-9 quarters, which is 2 years or so, the kind of movement that has happened because of infrastructure growth has percolated to the industrials very clearly. And That we see as an extremely positive step that should continue with the government's budget that came in earlier this year.
Mr. Agarwal, if you can just comment on how global supply chains have moved. You move a lot of raw materials into and outside the country. Given this intensity of the Middle East conflict and of course no let-up between Ukraine and Russia, how have the last 3 months been in terms of exit in and out of the country?
It has been challenging, certainly. I think for customers who need to reach out to their customers in the Western markets, the challenge has always been how can I get the cargo fast enough? But I mean, ships have to go around the Cape of Good Hope essentially before they get there, and it is taking longer. Container availability is a problem. Freight rates are on the higher side. There is some softening that is starting to happen, but that's not too much either. So certainly there is an impact on shipping rates globally. The indirect impact of that sometimes happens is that ships that are operating on the domestic sector move out of this sector and they move to international waters for better realization. That helps the domestic sector a little bit with freight rates going up, at least from our perspective, from as a company perspective, certainly not from the consumer perspective. So yes, the international rates, the EXIM cargo is still not out of the doldrums yet. It will take a few more months for it to settle down. Perhaps something when if the geopolitical tensions ease down, or if there is a very clear-cut indication of recession in some parts of the world, we will see that these freight rates globally will come down.
Sir, talk to us about the expectation on the EBITDA margin going forward from here. By the end of the year, what have you penciled in? Are you on track to already achieve it? And are there levers in the second half that could further push it up beyond your expectations?
The EBITDA margin percentage is about 10 to 11% is what we look at roughly, because there are years that we are making a lot more investments, so EBITDA tends to go up. Otherwise, it is usually in that range. It has been slightly higher in the last few years because of our Seaways business, but generally that's the range that we like to maintain because of the business nature of the business. We have given a guidance for a 10 to 15% increase in our top line and the similar type of guidance for our bottom line. We are certainly higher on the bottom line, but I think things will start picking up in the second half of the year from a top line perspective, but not necessarily from a bottom line perspective. They should remain stable. So I would still stick by the estimates that we have given at the start of the year.
Okay. Mr. Agarwal, I observed that a bit of long-term borrowings as also short-term borrowings have gone up in the last 6 months. Is it by design? Is this cyclical? Or is it pointing to some underlying issues in the economy where you are likely to borrow more? Is it something to do with capacity expansion, or is this just a normal working capital cycle?
So the borrowing happened actually because we bought new trucks. We also have 280 crores of cash on our balance sheet. So it's not that we are net debt-free company. And we also just did a buyback of 160 crores. So there was enough cash, and this is just because it's actually cheaper to take loans, trucking loans, versus actually using cash. So hence, we've just optimized the treasury functions.
Mr. Agarwal, you did mention that you bought some trucks. I just wanted to point out one thing. Just 1 second, Shail. I wanted to ask you, I believe you have articulated earlier that you're moving away completely from the fossil fuel trucks. You moved a large part of your fleet to CNG already. Is EV now a big portion also, or going forward, do we see your fleet turning electric as well?
No, not so right away, because most of our fleet is long distance and also for specialized applications. For example, industrial gases or car carriers, etc. And we've not found a reasonable solution there yet when it comes to EV. So we are certainly seeing good solutions in CNG, LNG, and some of our fleet has already started converting into that. And some of the new fleet is also some of that. However, the transition to completely, well, it's not completely, but to uh, lesser carbon emission fuels, that is CNG, LNG, will start happening by the end of this decade for sure. It'll get completed by the end of this decade. However, moving to EV, etc., is going to take much longer because trucks are not available. Those kind of trucks are not easily available.
Right. Mr. Agarwal, your business is a leading indicator for the entire economy. You are the first to gauge where capacity expansion is happening and where fresh finished goods are coming out of newly installed factories. In the last 3 months, which sector or which sub-segment of your business has shown addition of fresh capacity, and which segment or which subsector has shown more finished products coming out of newly installed factories?
What we are seeing, for example, I mentioned industrials. So industrials is a broad subject, but in that, if you take specifically things like engineering products, I think those have done reasonably well. We know there are lots of metro projects that are coming up, railway projects that are coming up. So some of those companies in that space are doing quite well. Apart from that, the import export of chemicals has increased quite a lot. Specifically, there are plants that have come up in India where there is a lot of capacity. With the capacity expansion, a lot of exports have started to happen. Even domestic movement has increased quite a lot. So those are, although we are the lower end of the cycle, in the chemical cycle, but generally speaking, there is movement that's happening because the base is higher. And hence, so industrials is doing quite well. I still see some weakness on the consumer side. FMCG, etc., are still a little weak. But I think with the good monsoons, that should start picking up.
Okay, Mr. Agarwal, how are you planning on the capex going forward from here? Is there a plan in place for, say, FY25, FY26 already? Do you really need to meet that demand, or are you sufficient?
No, certainly. We need to add more capacity when it comes to ships, to trucks, warehousing, and so on and so forth. This year, we have a capex plan of about 350 crores, which includes about 75 to 100 crores in fleet, then about 100 odd crores in new warehousing facilities, and then about 100 crores we are putting into advance orders for ships that are going to come in 2026. So essentially, in the next 3 years, we think we'll end up spending about 750 odd crores, and 4-year plan is about 1,000 crores of capex. So this will continue.
Right, Mr. Agarwal, thank you so much for your time, and of course, festive greetings to you, to everybody at TCI, and to all family members at home. We hope that the coming 2 quarters are much better than the last 2, and of course that you create a lot of shareholder value as you've been doing for the last 20 years. Thank you for your time.
Thank you so much, and best wishes to you. Thank you.
All right.
That, ladies and gentlemen, was Mr. Vineet Agarwal, Managing Director of Transport Corporation of India. This is India's largest mover of finished goods and raw materials, whether by the shipping route or, of course, via trucking. It's not looking good on the market, Sakshi. There is no rest for bears. And bulls continue to be on the back foot. 24,250 is what you see on the Nifty. 150 points down. And Nifty Bank is worst off, 1.7% lower, 900 points down, 50,622, and this is primarily on account of IndusInd Bank. It is now down 16%, actually 17.6%, a bad set of numbers, and the market punishing it. IndusInd Bank is now contributing 241 points to Bank Nifty's loss. HDFC Bank is contributing 290 points to the Bank Nifty's loss, and it's only Axis Bank that is holding forth as far as the green side is concerned on Nifty Bank. Let me just point out where the low is on IndusInd Bank. Last we checked, it was May 2023, but with another 7 percentage point down tick, I'll have to readjust the chart to find out the low. Okay, this is the lowest since early April 2023. So that's what it is, ladies and gentlemen. But some amount of buying is resurfacing on counters such as ITC and Hindustan Unilever, but overall this is not looking good. I'll just mark the advanced decline ratio for you. It's now 240 shares in the green versus 2000, actually 2100 shares in the red. So Friday is turning out to be very, very painful for the markets. Let's hope things improve in the second half, but it's not looking like that. Sakshi.
Okay, we will wrap it up at that. The morning edition, 153 points lower, 24245 at this point in time on the Nifty. But viewers, stay tuned. There's a lot more coming up for you throughout the course of the day. There will be festive special shows. There will be earnings special discussions. A lot more to really take in to understand the pulse of the market. Stay tuned with us on Business Today Television.
We have Mr. Guha, MD and CEO of Birla Soft Limited. This is a mid-cap IT company, and the numbers on the top line are fantastic, but it's the profit after tax where you've seen a slip, not only quarter on quarter but also year on year. Namaste, Mr. Guha. A very warm welcome to you, sir. Festive greetings as far as the Indian business is concerned. How do you see this challenging environment for